Good evening, everybody. We'll kind of make this a short session. Well, no, I got a bunch of stuff. But we'll kind of review just so everybody has a grasp of what to be looking for the high probability trade setups. Is that impossible? Jay, I don't think so. I don't think so. Just look at the list of all the stocks that we want to take a look at. But we can see what happened today. Another bullish day in the markets. And the Dow was having a little bit of trouble getting through this level. But eventually it went through, which obviously tells us we're playing wave one, wave two, now definitely in wave three. And the definition of a Santa rally has been all across the board. Some people were saying it starts 5 days before Christmas and goes 2 weeks into the next year. Somebody else was saying it starts 3 days before Christmas and goes 2 days into the new year. It doesn't matter what the definition is. We've got the benefit of being able to visually recognize what investor sentiment is doing. So if we want to call this a Santa rally, and everybody else wants to call it a Santa rally, doesn't matter. All we're interested in is which way is it going. Now, because there was a little bit of hesitancy to say there was a major reversal because the Dow didn't do a reversal, the evidence was more so over here in the NASDAQ where we had that best friend gap up, and then we broke through this level. I hate that thing. Broke through this level right here, right at the 50-day moving average. Stochastic's not anywhere near the oversold area. That could imply, again, more upside. Okay. I guess we will do a Thursday night session. Whoops. Probably won't be too much, but at least we can take a look at what might be the sectors to be in coming out of the chute in the first of the year. So, and then we can see what happened here on the S&P 500. It gapped up through this resistance level again after a Morningstar type signal. So another implication that we could be in another steady uptrend. Thursday night login is defective. I don't know how it can be defective, Bill. Do you see what the password is on Thursday nights in your links on off? Oh. Thursday night login. Well, probably because we're not near Thursday night yet, and we probably don't have. And if you're a member, obviously you don't have to register. You just stay in here. Now, Bill, if you want to be in it on Thursday, don't log off for here. Just keep it open. So, anyway. All right, so I hope as we keep going through all this analysis that you can see how you want to put 2 plus 2 together. 2 plus 2 being a kind of a short reference to the more aspects that you can put into your visual analysis, the higher the probability you're going to be in the right trade at the right time. So the best friend signal. That's your first clue. There's a strong up move. Second clue is you can see there's a scoop type pattern. Third clue is kind of a double bottom. So where do you think the likely target was going to be on this one if it opened positive? They're going to probably eventually take it up to at least this level. So yes, the term 2 plus 2 is just kind of referring to the fact that if you can see something setting up and it has more than one element of a positive trade, the higher the probability you're in a good trade. So we recommended Kind today, and it traded positive. However, it opened and then traded lower. Didn't dissuade or didn't deter the fact that this is an uptrend. It just said today was not a good day to get into it. However, what makes a strong entry on this type of trade setup where you can see the buying coming in, you're coming up out of the oversold area, you're trading up above the T-line? Very simple logic. If they could bring it back up through today's open, that's pretty much continuing the trend that we were expecting. So this is what makes not only for identifying a good chart pattern setup based upon the norms of human nature, but we also have little techniques that make adding to the probabilities of being in the right trade at the right time. That's right, 2 plus 2 equals 5. So everything we can add to a chart analysis, kind of a bullish meeting line here, doji, 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 gap up. And where did they do all this after eventually closing above the T-line? They did it right off the 50. So this is what you put into the category of observe the obvious. The obvious was they pulled back to the support level. Let me see what the prior trend was. Prior trend, after breaking out of this fry pan bottom pattern, produced a good profitable trade, got into a junky area, eventually started selling off right to a level that everybody else was waiting to see what it did here at the 50-day moving average. Now, when I say waiting to see what everybody else was doing, they were all waiting to see if there was going to be support at the 50. The visual elements of candlesticks told us, yes, they were buying here at the 50. You could have been buying this one on strength today, especially when it came up through, let's say, the high of the doji. Number one. Number two, if you could see that the indexes were trading positive, and this was trading positive, yeah, if you liked this one, you would have been buying it. Now, some people may have been buying right in here because it was already bouncing up off the 50 and waiting to see what it did here at the T-line. The fact that it opened positive after a doji right at the T-line and the markets were trading positive, stochastics just coming up out of the oversold area, that made it a high probability trade setup. Now, there are different methods for trading, and that all depends on each person's nature. Darn, I had something that I could segue right into. This may have been it. You can see where they pulled back this one, right back to the 50. Now that becomes a clue, obviously, doing it when the stochastics are down here in the oversold area. And then we can identify what type of buying is occurring once it hits the 50. Well, there's your doji sandwich. There's your doji sandwich. So the implication should be that we know that they were buying at the 50, and we could see the strong signals like a doji sandwich that told us there's probably more upside. SOPA not so much, because it's doing it at the T-line, which nobody has the T-line on their charts. Which means we're not, let's see, let's just reiterate. You want to hold on to your individual stock chart requests until I tell Jim to do the double line. I've got 50 stocks here that we need to buzz through, so we would do it. So, CR, this is not the same thing. This is a different pattern. Doji gap up through the T-line, which we recognize, but it's not the same as watching something where everybody is using the. So this becomes much more relevant because everybody has the 50 on their charts. RDWR. There's your trend kicker signal right here at the fry pan bottom breakout level. So here's the difference between, and then there's always the black swan like MAG. Yep, and that's, we'll get to MAG here in a little bit. This is why I always tell people, if you're in the overbought condition, put a safety stop in someplace. So I illustrated this on the YouTube tonight, that this was an ultimate place to be buying because it was a trend kicker breakout of a fry pan bottom. And now what do we do up here? Well, we can see what the Japanese rice traders have illustrated to us for centuries. Where do most people buy? They buy exuberantly at the top. What gives us the idea they're buying exuberantly at the top? One, they gapped it up in the overbought area. Two, they took it up big. That's showing you that people are starting to pile in. Now, what does that do for us? Just because it makes us a little bit more alert or more attentive for watching for profit taking. AMR. There's your fry pan bottom. And this is a good example of the fact that a fry pan bottom will still stay in effect as long as they don't close it below the T-line. An additional confirmation is whenever you're in an uptrend and they come right back down to the T-line, in this case the T-line and the 50, and bounce back up, that's good evidence that the T-line is still acting like that natural support and resistance level of human nature, that it still confirms this fry pan bottom is staying in place. Same scenario over here. Nice fry pan bottom setting up on DCPH. You could be accumulating this because look where you're trading right now. It backed off a little bit today, but notice what it didn't do. It didn't close below the T-line. So as long as it stays above the T-line, you have to assume that the fry pan bottom trajectory remains in progress. AMR, oh, we just did that one. Ford, you can see what it has not been able to do. You can see there was kind of a trend channel in here, and they couldn't close it below the trend channel. So what can we obviously view? Wave 1, wave 2, now the possibility of wave 3. Where's it going to be most decisive as far as a wave 3? Probably if they can come up through this level. And CF, another one where you kind of observe the obvious. Indecisive trading, kind of a fry pan bottom, rounding bottom. There's your bullish double doji sandwich. Then there's your best friend that took you up through that level. So this is the type that we want to get stuck in, where you can recognize the pattern, telling you the probabilities are still in your favor, and then once it gets moving, now we only have one criteria, two criteria to worry about. One, seeing a sell signal too far away from the T-line, or two, that it keeps moving up steadily as long as you're above the T-line. So we've had some very good trades this year in situations like this, this is LPI, when we did the Morningstar best friend gap up off the 200 through the T-line. How long did we stay in this one? Well, as long as it didn't close below the T-line. So this is the type of thing that keeps the whipsaw mental action out of your trading. I say the whipsaw mental action, I may have closed it here because there's a bearish engulfing signal way up here in the overbought area. Prior to the T-lines being put on our charts, I may have closed it out with the idea that I could always get back in if it stays in an uptrend. Well, before the T-line came along, I wouldn't know that. Now that we have the T-line as a major factor, as knowing that it's a natural support and resistance level of human nature, it becomes much simpler and much less anxiety-wise to just stay long as you don't see a sell signal and a close back below the T-line. So now what we're looking at is a best friend signal and a close right here at the 50. Would you close a trade whenever it closes below the T-line regardless of the signal? Joe, I would close a trade if it wasn't a signal, if it was just a pullback and closed slightly below the T-line. I'll give it one more day because that may have just been somebody selling. I want to see if that trend of the T-line is still in progress. Now, if it had been a reversal signal and a close below the T-line, yes, I'm going to close it out because what's the reversal signal tell me? That's my number one criteria for telling you what's going on in investor sentiment. And the fact that it did close below the T-line also tells us that there might be a major change of investor sentiment. So I'll try to find one, but if I see something that's I still don't see one. Had this closed just slightly below the T-line, without a real signal in here, I would have given it one more day. But my criteria at that point would have been, if they opened it lower, I'd have closed it out. Because sometimes they'll close it just below the T-line, but if the market in general is still heading up, that may just be some selling. And the fact that the T-line's been a support level for weeks and months, says, all right, give it one more day. But what if that bar is closed way below? If it closes way below, yes, you close it out. On something like that, if I had stayed long in all this, that day I would have closed out because that's a significant sell. First of all, you got a sell signal and convincing selling. All right, so on this one, LPI, if this opens positive tomorrow, what's it telling us? Our best friend, our bullish engulfing, and the 50 now is not acting as resistance. You can still be a buyer of this one. Arlo, now this one you stay long, but You obviously watch to see what type of formations are occurring up here. You've got an indecisive, then a doji, then a shooting star. Stochastic's overbought. You're still in an uptrend, but we're starting to get sell signals. So what do? You put a safety stop someplace where it shouldn't be trading, like just below today's low. Because if they open it and start trading off, that's kind of confirming those signals. Steve, they all should be in the members area somewhere. John, look at what it was telling us. Is that what type of pattern did that look like it was setting up? So I may have been buying on this day and then thinking, boy, if it opens lower, I'm closing it out. Well, it opened lower and then immediately started trading positive. So what was this telling you when it pulled back? You probably have a J-hook pattern setting up. Let's see. I will do this. Whoops. Humbug. All right, I forward that on to. No, it was correct to close out that position. That was a bearish doji sandwich. So that was the right thing to do. Now, you could have gotten back in, but remember, when you get back into a trade that you've stopped out, remember your supply and demand, meaning the supply, there's probably a dozen good charts, 2 dozen good charts, 3 dozen good charts. You have to ask yourself, all right, do I get back in this, or is there another strong chart someplace that looks like this where the probabilities are better? So just because you get out of a trade doesn't necessarily mean you have to get back in. And this is why the scanning techniques of candlestick analysis is so beneficial, is that on any day, if I had closed this one out, I had probably found 3, 5, 7, 10, 12, 15 very good charts. Now I've got that money to decide whether I want to get back into this one or do I find another trade. So you were right to get out. Now it's just a decision of whether you get back into that trade. Because this is the type of thing you want to be able to analyze. Would have been out on this one. But now might be getting back in because what can we kind of project going on in this chart? I got a trend channel, which means there's a high probability they're bringing it back up to the top of that channel. Yeah, I've already sent the that request to Abe, so he may not have gotten back to you because he might be drinking lots of eggnog. Same scenario here. Which direction is this starting to move? Back up. You might have a wave 1, wave 2, wave 3. Why do we say you might have? Because there's your hammer signal. There's your bullish confirmation. And you can see how it was being confirmed in a bullish direction. They're coming back down and using the T-line as support and then bouncing back up. Where would you think your next target could be? Wave 1, wave 3. Bees are home. So here's another indication of whether a chart is good or not. If you're looking at this and saying, is this good? Well, then you look at bees are home and, darn, I'm trying to think of some of the other ones. But if you look at 2 or 3 of the other housing stocks and they're all trading positive, that's a good indication. Is Sky another one? Yeah, so that's a good looking chart. And so if you've got 4 or 5 housing stocks, that's what I was looking for. Thank you, Jay. They're all your housing stocks across the board. Yeah, NAO is kind of the ETF. If your ETF is acting bullish, that's more confidence or more indication they're buying that sector. So here's one that we recommended not too long ago. Let's get rid of all these. I don't know why they stay from one chart to the next. But you can see where the breakout was. Then you could see the gap up shooting star. So same rationale. If they're gapping up in the overbought area and doing a candlestick signal, where do you take profits? As soon as they start trading lower. Because where can you get back in? You can see this is a J-hook pattern setting up. GRPH. Anything telling us on this one? Well, when they broke out here, they've been running into the 50, and then it went through. So this is why the doji rule is very effective. If this opens lower and trades lower, it's having a hard time. You try to close it out. If it opens positive and starts trading positive, you could even be buying this above this level, because that tells you the T-line crunch has worked and it's heading higher. Whoops, I skipped a whole bunch. We would do a session on entry strategies. Oh, for crying out loud. This was a good looking chart. Piercing signal, best friend, bullish confirmation. At this open positive and traded positive, you could be buying it. But here's the advantage we have again with the graphics of candlesticks. When they opened it lower and started trading it lower, what did it tell us about the strength of the bulls? They weren't in there today. It wasn't a good day to be buying. Now, what's our strategy at this point? Piercing signal, best friend signal, close above the T-line, came back up. If it comes back up through this level right here, you can be buying, because that tells you this whole system of buy signals is still in progress. We just had a profit-taking day that kept us from getting in on that day. But if it opens and starts coming back up, what's it telling us? They're confirming all this buying right here. Oh, I forgot to use this signal with our indexes. Again, this is that corporate bond index. That if it's trading positive, that means there's bullish confidence out there as an indicator because they're buying the corporate bonds. There's another fry pan bottom, an AEHR. Where do all these lines come from? Nice fry pan bottom. What do you do with this one? You just stay long. RVNC. Now this one backed off. You've got two choices here. One, when you saw you had a doji in the overbought area, you put your safety stop right below the low of the doji. It shouldn't go back to that through that level. And if it does, where do you think it's going to? Coming back to the T-line. So if I stopped out right here and I was interested in buying, I just wait to see if it's doing a J-hook pattern and starting back up again. Again, all of this is based upon visual probabilities. We know that as long as you're above the T-line, you're in an uptrend, but the top criteria is the signal itself. Kind of a bearish engulfing or a bearish left-right combo. Close it out. Now you can make a decision and use that money for something that looks like this, or get back into this trade. Same thing with QSI. No signal here. But what should we be anticipating based upon this move? A 45 degree. If I was long on this one, I'd probably have a safety stop just below today's low. Because if this isn't a 45 degree, it should open relatively flat and continue this uptrend. If they have enough strength to bring it down through here, where do you think they're taking it to? They're probably coming back to test the 50 and the T-line. Close it out and then wait and see what happens at that level. This one is a good example of that if there's that much selling, a bearish engulfing signal in the overbought area, and a close below the T-line, if I didn't close it out here, I definitely closed it out at the end of the day with it closing here. Because what are my probabilities? A bearish engulfing signal closing below the T-line in the overbought area, that's not the place I want to be anymore. Take that money and go find another good trade. And yes, MAG, this is why the doji rule is so important. You were long, and you saw they were gapping it down, even gapping it down below the previous day's doji low. What's that tell you? First of all, we know the doji rule, that it's going to move in the direction of how they open after a doji. Secondly, we know if they're gapping it down, there's something wrong after that day of indecision. Close it out immediately. Especially if after 3, 5, 7 minutes they're trading it lower. Where do you think they're taking it to? They're probably bringing it back down to the T-line. But that doji gap down, remember, it's just like your bullish best friend goes this way, your bearish best friend goes this way. Yep. But it wouldn't be so much of an ouch if you trade by the rules, which says a doji gap down in the overbought condition, close out the position immediately. Now, if you are short, our recommendation of going short here on BNTX was based upon the bearish doji sandwich, for the fact that when they started trading lower, you could start shorting it here, because where did you think your next likely target was going to be? The next support area that everybody else could see. So this is why it's crucial to know what your signals are telling you. A big bearish engulfing signal at the same level it topped out before. And then they did a bearish doji sandwich. First target, second target is probably down here in this range. But that was your clue right there, that when they opened lower after the doji, either they needed to open positive to tell you that they were doing a J-hook starting back up, but if they opened it lower and started trading it lower, that told you this signal was still in effect and the doji sandwich was confirming it. So anytime I put on a trade, I know the probabilities are in my favor just based upon that 2+2 analysis, everything going in the right direction. So you use that same strategy on the bullish side. So look where they supported NVIDIA, right here at the 50. Look what they did today. A doji sandwich. Stochastics coming up. What's the implication just by that doji sandwich? More upside. And what else told us there might be more upside? Well, look where your trend was broken. Right there. So you've got people out there that were ready to buy when it pulled back to the 50. You've got technical traders that were ready to buy if it broke that downtrend. And you've got a very minuscule number of candlestick investors that would have been buying based upon the support at the 50, the doji sandwich, and the breakout of that resistance level. What's now our anticipation? We could have a wave 1, wave 2, going into wave 3. Now, does that necessarily mean it's going to do a wave 3? No idea. But the probabilities of it doing what we suspect because of the reoccurring nature of human sentiment, this puts us in a situation where the probabilities are greatly in our favor that we're in the right direction. So anytime we can see things that everybody else is watching, I don't know how those little squares got there, that puts us in a situation where we can see exactly what the investor sentiment is at those resistance levels. So on Tesla, kind of that same scenario, nice strong up move, but what's the last trend movement? Well, there's kind of a resistance level right here, which Tesla hit today. So what would we do if we were long? Definitely want to see it get through this level. If it started trading off, that pretty much tells us this downward trend channel is still in effect. And that's what this information right here tells us based upon that candle failing at the breakout level. Apple, there's your doji sandwich. What type of pattern? J-hook, wave 1, wave 2, going into wave 3. What would we like to see for confirmation? If they trade above this level, telling us this area now is breached and you're in the next wave to the upside. Now, are all the biggies working? Obviously not. Netflix, probably in an uptrend, but we definitely need to see that double doji positive open tomorrow. And Amazon, that's not a good looking chart at all. You don't want to be long or short this one right now because there's absolutely no direction to it. Okay, let's take a 30-second break. Need to get a drink here. Okay. Did I do that wrong? I thought I did that right. VLD. Well, Shazbots. Yeah, that one comes up over here, but not over on the other one. That just doesn't make any sense. All right, so this is why we want to do a study, or each person should do a study on what happens based upon specific price moves. You can see the nice fry pan bottom, the breakout. So what is our process at this point? First of all, we want to see what the news was that caused that big breakout. If it's something that was more than just an up rate or something like that, it might have more upside, then we wait to see how they open this tomorrow. Now we know what our trading platform should be. And this is why if you start learning, yes, it was a partnership, so it might have more upside. So if I was buying on positive trading tomorrow, which we'd need to see, confirmation, I probably wouldn't want to see it trade back below this level. As long as it stays in this range, we're anticipating that it's going to be a 45-degree. Flex. Kind of a double doji sandwich. Where would you think your next target's going to be? Probably up in this area. But the fact that they gapped it up, and through the 50, it's a good, strong chart. But what's the added attraction to this one? That everybody and their brother watching to see what it's going to do at the 50 sees that it's gone through. You could have been buying this early, or you SLNH. Well, for crying out loud. Make you nice, bullish, indecisive stage, little trend kicker type signal. The fact that you've closed right here on a strong move gives you the good evidence that they've reversed it. Now, if they opened up positive, this would be a place where you could be buying immediately, knowing that you came off a strong buy setup. And what do you think everybody else is watching? They're waiting to see what happens. What's happening here? Flex is not so much a double doji. It's a double doji sandwich. So remember, a double doji. Whoops. Is more something like this, where they've taken it up. You're still not in the overbought area, or anywhere close to the overbought area. They pull back indecisively, pull back indecisively. Then if it opens positive tomorrow, that's your double doji. Now that's different than a double doji sandwich, which, what were we looking at? Was it Flex? This is more of an identification of a double doji sandwich. Big candle, doji, doji, big candle. Yep, so terminology, one's a double doji sandwich, one's a double doji setup. HIMX. This is the type where you can get aggressive, knowing that if you did a doji just above this level, kind of on a T-line crunch, but if it opens positive, what do we know about our doji sandwich? It's going to trade positive, probably of this magnitude. Now, that in itself is good, but what else does it tell you? It tells you they're moving away from the 200 without any resistance problems, so you could be buying on a high probability trade setup. And that rhetorical question, you always get big moves on those type of moves or type of setups? Not really, but you're putting yourself in situations where the probabilities of being in a big percentage move is much greater in your favor. A good move, hammer, gap up, but what's the good move here? The fact that they gapped up through the last resistance level, telling you there's a lot more upside. Same scenario. What's that gap up tell you? Look at your Morningstar signal, your double or your doji sandwich. So what do you got right here? There's your McMuffin. So what do we want to see to confirm a McMuffin? Positive trading, which it did. What would be additional confirmation? The fact that you pretty much came right through this resistance level. And you could probably even make that, oh, we're really screwing up here. Even through that resistance level, well, pshaw. What do you got? Wave 1, wave 2, Morningstar McMuffin right off the 50. That's a high probability reversal spot. Again, you're witnessing a strong bullish candlestick setup, the McMuffin, off the 50, stochastic coming up, double bottom. What do you think everybody else is watching? See what they're doing at the, yeah, eventually all the lines are gone. Everybody else was watching to see what it was going to do at the 50. CCRN, your Morningstar signal right off the 50. Now what do you got going on? You can see your J-hook pattern setting up. Upstart. Well, this looks like a railroad line here. Not quite a double doji, but the same scenario. Failed at the 50, I'm sorry, failed at the T-line, doji type day, then gap up. That's all confirming that this is now probably heading up toward the 200-day moving average. So this is the type of setup you want to start getting your eyes accustomed to. Where are the setups? Up day, indecision, up day, that tells you which way they're going. If they open positive tomorrow, the 50 is not acting as resistance. CPE, if it opens positive tomorrow, the 50 is not acting as resistance. Apache, the 50 wasn't acting as resistance. You can see this downtrend has been broken with a doji sandwich. And Nog, hungry for my eggnog again. Right off the 200, where do you think the next likely target's going to be? Probably up here to the 50 and then see what it does from there. So we want to be able to evaluate what the probabilities are that we're heading in the right direction. Devon, if this trade's positive breaking this level, now you're in the next wave to the upside. And AR, that's kind of your double doji setup. Strong move, indecision, pullback, indecision. The next day they take it up. That would imply there's more upside on this one. Shoot, it was going to be done by 8:30. Inverted hammer, Morningstar signal, basically right here at the 50. You could be buying this one on positive trading because of the inverted hammer, Morningstar signal. Or you could wait to see that it gets up through the T-line. Nicholas, hold on to your individual ones until I tell Jim to do the double line. That's more of a double doji sandwich. Morningstar signal, gap up. Where's your first target? The 50. Where's your next target? Wave 1, wave 2, wave 3. And we did wire. Wire was one of those with a high probability setup. Wave 1, wave 2, right to the 50. Doji sandwich, probably more upside. The advanced micro, once again, bounced right off the 50. Observe the obvious. Wave 1, wave 2, right back to this level. Started seeing buy signals. What's our expectation here? Wave 1, wave 3. Same thing with Micron. Oh, that's not what I wanted. Micron. Wave 1, wave 2, your best friend breakout, wave 3. Okay, so with this market heading up, the probabilities are that it's heading higher. However, there are things that are selling off hard. So, fate. If this opened lower tomorrow, that could be one of your safety stops where you have a short position on. NVTA. You can see how it rolled over. Where do you think your next target is likely to be? Back down into the trend channel. Why? Observe the obvious. Where did it fail? Right here at the 50 with your bearish Harami. Now you're back below the T-line. Where do you think your next likely target's going to be? Probably the bottom of this channel. And Beam, where did this one fail? Right smack dab at the 50-day moving average with a doji Harami, a doji, and a bearish doji gap down. Downtrend, where do you think this one could likely move to? Back to the bottom of the trend channel. So you also, if you have 10 positions on, and you know the market's heading pretty much in a northern direction, you still want to have a few short positions. You might have 8 longs and 2 shorts. NNOX failed right here at the 34. You're in a downtrend. Where could the next target be? Somewhere down in this range. So this is why not only do you want to be able to identify the good trades, but you also want to have some logical money management. That market's heading up, you don't want to have 10 long positions on, because for all we know, tomorrow they come out and announce something in Washington that crashes the market. You don't want to be long 10 positions. Okay, I guess that's about all I got for tonight. Anticipate that we're going to have more upside. So you want to be predominantly long, but we've got some short positions that are working very well. So it just acts as a buffer. So with that, are there any general questions on candlestick analysis? Okay, if not, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. Okay, Agilent. We'll start with A. Stay long. Keep your safety stop at today's low. Rambus. Stay long. Expect it to go through, which would take you back up to the top of the channel. Marvell. Stay long. Doji sandwich. J-hook pattern. Snow? No. There's nothing on this chart that would make you want to buy. I wouldn't be long or short snow. And click. That one you could be buying. It's not your best looking chart, but you could be buying this one. I say it's not your best looking chart because it's basing and might be coming back up. But as you can see, it's not a very good trending chart. PayPal double doji setup. Yeah, not a double doji setup, but a double doji implication. Again, with the doji rule that if it opened lower, you couldn't get through this resistance level. If it opens higher, yes, your bullish signal is in progress. So once again, it's a process of what do you think, or what happens with the pre-market futures. AR, you stay long on this one. Kind of your double doji setup right there. QuantumScape hasn't done anything yet. Now, if this opens positive tomorrow, that's kind of your double doji setup. Off the T-line, that would make the 50 your next likely target. Mara, if you buy this one, it'd be on positive trading tomorrow, doing your doji sandwich. Do I put a stop on the low of, you could, but if it opened positive, make this bigger. You've got kind of your cradle pattern, doji, doji, doji. If it opens positive, it should be trading positive. I would probably put my stop just below the, what is that, the open of today. Because if it opened positive and came back down through there, it's not doing what it's supposed to. Boil. You could buy this one on positive trading, your natural gas. That's a fry pan bottom breakout, yes. When it went through that level. SP we did upstart. You could buy this one on positive trading tomorrow. CrowdStrike. Nothing wildly exciting here. You need something very strong to tell you the bulls are taking control. Otherwise, this is kind of still in a basing area. Costco, you can get ready to buy this one on positive trading. A wave 1, wave 2 sideways. Look at your slow curve, fry pan bottom, doji sandwich. You can buy that one on positive trading. GREE, that's setting up. That would be kind of considered the dimple. So from here to here should be the same from here to here. I would probably not pay attention to this one until it gets up through the 50. FCF, not very exciting, but it's about ready to break out. If you're long, stay long. The banks are, they'll move a little bit slower percentage-wise. And CPRX, kicker type signal, stay long. Still looking for it to break out through this area. Oh, nothing on this one except just stay long, and that's not really a gap up. Am I looking at the right chart? No, that's not a gap up. That's just continuing uptrend. These are toughies, but you can see that it broke out. It did the message. Now the message tells you the profit taking's over. You could be buying this one. I'd be buying this one, though, off my 10-minute chart. Nokia, just stay long. NXRT. Another one, you can see the fry pan bottom. You can see that it broke out. You could buy this one on positive trading. Also, Myrna, stay short. Ever since your dark cloud, stay short, and you're not quite in the oversold area yet. However, if I was short, I'd have a safety stop at today's high. If they were able to bring it up, you have a doji, a spinning top, and bullish confirmation, kind of telling you this area is acting as support. I'd cover the short positions at that level. SOX, just stay long. ABCT. You could buy this one on positive trading because of the pullback kicker type signal and then another kicker type signal telling you this breakout is still in progress. Lucid, nothing. It wouldn't be long or short. No trend to this one. I think we did this one. Broke out nicely. Stay long. Matador. You can buy this one. Not anything dramatic just yet. So I'd suspect the first target is the 50-day moving average. GNRC, nothing here yet. You still need to see confirmation. I wouldn't be long or short. If I was long and you were holding it, it has to open positive and get up through this level. I'd probably want to see, by this time, a strong move to the upside. If it trades sideways again, I'd probably close it out and find someplace better. We did Tesla. You stay long on this one. Nothing exciting on WalkMe. No direction. I'd be someplace else. This one gapped up on your best friend type signal. Best friend signal, inverted hammer. You stay long on this one. If I was long, I'd have a safety stop at today's open. If they came back down through there, they're coming back to test the 50 to see if it's going to act as support, which means you're going to have a few days of consolidation. Ribbon looks like it could be a buy. You could buy this one. You just want to make sure it gets through this level. Not quite a scoop pattern, but got the setup for that. And Ballard, nothing. Would not be long or short. I'm trying to think of what ones were I'd be going after pretty strong, and I can't remember. Okay. We're in an area where we're much likely going to be in an uptrend. Worst case scenario, is we don't have a lot of selling pressure anymore. So the implication is that we could have more upside or at worst some sideways. Okay. Yeah, HIMX was a, but they've already moved. Darn. They'll be in the picks tonight. I'll have to go back and figure out. So there's a nice little scoop type J-hook pattern on CHRW. All right, everybody, finish up the eggnog. Do you ever look at a weekly chart to confirm? Not really. The things I look at, first of all, is the signal. The second is it an uptrend? Is it doing a pattern? Third is other things in the sector confirming. That's an okay chart. It looks like it's trying to break out. Yeah, it broke out through the 50. So now it needs to get through this level. So we'll now the weather's just getting lousy. It's been extra warm here, but we'll do a session on scanning for the best trades here pretty soon. All right, everybody. We'll see you bright and early tomorrow morning. We'll see you then.